Bitcoin just lost a critical support level over the last 24 hours, dragging the entire ecosystem down. We are analyzing whether this is a healthy correction or a full trend reversal. This is market analysis, not financial advice. The market cap contraction is evident, with Bitcoin currently sitting at $1.23 trillion. This drop is not isolated, it reflects a broader liquidity tightening across digital assets. When Bitcoin dips, the correlation coefficient with altcoins typically spikes. We are observing a significant sell-off in high-beta assets as investors rotate into stablecoins. Look at the terminal data for the recent flow of funds. The volume proxy suggests that the selling pressure is coming from institutional desks rather than retail panic. The divergence between Doge and hype assets is widening. While Doge holds some support, the more speculative hype tokens are seeing a massive liquidity drain. Stablecoin dominance is often a leading indicator. As Bitcoin retraces, we see a clear uptick in USDT and USDC inflows, signaling a wait-and-see approach. This is not the time for aggressive leverage. The volatility index is hitting a multi-month high, suggesting that the market is bracing for further turbulence. We need to monitor the 60K psychological barrier. If that holds, the long-term structure remains intact despite the short-term noise. Institutional desks are currently adjusting their delta exposure. This explains the lack of a quick bounce back after the initial dip. Remember, crypto markets are highly reflexive. Price action influences sentiment, which in turn influences price. It is a feedback loop. We are tracking the funding rates across major exchanges. A negative funding rate would indicate that the market is becoming overly bearish, which is often a contrarian signal. As we look at the weekly chart, the trend is still bullish, but the slope is flattening. This indicates a cooling off period rather than a structural break. Diversification is key during these periods. Avoid over-concentrating in high-beta assets that are prone to liquidity shocks. Follow at candle inside of C for daily market data, decoded. This is market analysis, not financial advice.